Hello and welcome to New Economic Thinking. I'm here this afternoon with Assistant Professor from the University of Iceland, Gudrun Johnsen. Gudrun, thanks for joining me today.
Thanks for having me.
There's a few things I'd like to discuss with you. First of all, you're from Iceland, obviously, and I would like to discuss the Icelandic crisis because even though it's a country of only 300,000 people, in a sense it is ground zero for the events which followed globally in 2008. So why don't you briefly describe the situation and the policy response?
Mm-hmm. Yeah, that's very well put it, Marshall, to call it ground zero of the financial crash. We actually experienced a perfect boom and bust cycle in terms of credit cycle. So we had the world record, to be honest. We went from 100% GDP bank credit to the private sector up to 250% of GDP in only 5 years' time. And then we're back again in 2014 to 100% of GDP. So we have had that perfect cycle. So excessive leverage was what happened in Iceland.
And it was excessive leverage, which was a byproduct of the financial liberalization, which was undertaken in the banking sector.
Exactly. So we had the privatization of our banking sector in 2003, and the buyers or the owners of the banks had great aspirations to put up a international financial center in Iceland. Encouraging the bankers to expand and conquer new territories, which they certainly did. And that basically for our smaller economy resulted in big capital inflows that had an imbalancing effect on our economy. The amazing thing is that we after the collapse, which was the largest in size, and especially compared to
I think it worked
GDP,
out on a per person basis to $30,000 per citizen in Iceland.
That could be, yeah, exactly. The banking sector had grown up to 10 times GDP. So the politicians, as the system crashed, had to go outside of the box and meet the demand of the public to know exactly what happened. So we are probably the only country that has done...
You've done the equivalent of a truth commission. You've actually gone and washed your dirty laundry out in public, which is something we've never done in the US and has really not been done in Europe as well.
Exactly. So we as researchers, and I was a part of this effort, we gained access to all financial transaction data, and we were able to do a post-mortem that was a true one. We could basically carve up the whole system and look inside. And there were many interesting insights that we got. First and foremost, it is the Icelandic case is extreme, but it's only symptomatic of wider problems. So nothing that happened in Iceland was invented in Iceland.
No.
So what we saw, how the bankers were able to expand the system to this size, was basically through building up a complex ownership structure. The owners of the bank were at the top of the pyramid, if you will. And so they were able to siphon credit into these myriads of special purpose vehicles, both in Iceland and abroad.
So this was effectively Enron on steroids.
That's very well put. Yeah, 10 times Enron, or 3 times. Let's be fair.
And there was a large amount of fraud, as there were in many other countries. But I think, in contrast to many other countries, the bankers did get prosecuted, and I think some have gone to jail. Is that correct?
That is correct. We also spotted massive market manipulation that has already been ruled upon in at least one case. On the account of manipulating the market, the stock market, and the CEOs, the chairman of Kaupthing, have been sentenced to 5-year prison. So that really the Truth Commission, as well as how we have handled it in our court system, really gives us some hope that we have a system that is working in a sense. Obviously, there were a lot of mistakes done by the policymakers prior to the collapse. But we have I think, contained a certain moral hazard that
And you've also
other countries have not.
And you've also shown that your political system is very resilient and responsive as well, because it appears that both major political parties were inclined to adhere. I don't think blackmail is too strong a word to the blackmail that was imposed by the international financial community, and each time the governments tried to capitulate to the demands made of them by foreign creditors, the people threw them out and effectively banned it by a referendum from taking actions which would have been inimical to the national interests of Iceland.
That is true. Obviously, the sort of outcome of those referendums, we were lucky in a sense that the court case that we insisted on taking part in was ruled in our favor. The odds were certainly against us, and that's a very interesting story to go into. But in terms of finance and society, this case is it's contained, it's a small population, we have all the data, we know exactly what happened, so it's really well suited for learning. And it tells you also that it's like in football, finance and football can be compared in a sense that when you have the players in the field, the reason why we go to the soccer game or the football game is not because of Messi and Zidane and those remarkable players. It is actually the referee on the court that upholds the rules, and it's a transparent system. The audience watches the referee as they rule on the behavior of the players. So irrespective of how big a star you are, if you
still,
don't,
in theory, have to play by the same rules.
Exactly.
Whereas to extend the soccer or football analogy in Europe or the United States, it seems that the rules were stacked in favor of the star players. That they were allowed to use performance-enhancing drugs, bioderivatives, shall we say? And there's been no attempt to redress the situation, which is why we have this, for example, this growing inequality.
Exactly. And not only on top of that, I mean, the trust in the system obviously has I shouldn't say isn't depleted, but it has taken a huge hit, and it's very difficult to build the trust again. And there are problems inherent in that lack of trust. We have people who are idle, who are not working due to this crisis. And that is basically the biggest failure in economic management.
But one of the important considerations which say marks Iceland in a very distinct way from, say, Greece or Ireland or some of the other problem areas in Europe is that you had your own currency, the krona. Mm-hmm. So it was able to float, it devalued, you were able to engender a recovery in your export sector. And I think you also made a key distinction between foreign and domestic creditors. So you bailed out your domestic creditors, told the foreigners, you've got to accept some form of debt restructuring. All of the factors which I think are not present in, and would in fact have done much to solve the Greek problem, for example, I think.
Yeah, Marshall, this is a little bit complicated because you have to also think about what type of effect the krona had prior to the crisis. Mm-hmm. So maybe it exacerbated it in a sense that hadn't we had the krona, we may have been in a different and less severe situation.
Well, possibly, although you could argue that maybe you just needed to have a less financial deregulation, and that would have actually solved the liberalization, which is what tended to bring the funds in, which caused the krona to rise in the first place. But the key thing was that it gave you the fiscal and national autonomy to be able to respond decisively to the crisis in a way that, say, Greece or Spain, for example, have not been able to do.
Yeah, I mean, we were lucky in a sense, or we did have smart politicians in a way that they hadn't really burdened the state with debt prior to going into the crisis. That was in part very fortunate for us. No, and certainly I won't deny that the krona came to the rescue after the crisis too.
And where are we right now as far as where's unemployment right now in Iceland?
So unemployment is no longer an issue in Iceland, and growth is no longer an issue in Iceland, but we still have the elephant in the room, and that is the capital controls. They have not been lifted. So we are basically sanctioned foreign exchange when we go abroad. Icelanders are sanctioned, FX is being rationed, excuse me. And that has a big impact on appetite of investments in Iceland. As investment is still the 6th year running in a historic low. We are not attracting the level of foreign investment that we need for further growth. So we are not out of the woods yet, unfortunately.
But there is at least light at the end of the tunnel, which is more than one can say for some of the other countries.
Oh yes,
in the world.
definitely, definitely.
Now, I'd like to change the topic for a minute. You invoked the famous phrase "finance and society." Of course, you are one of the co-organizers, along with our institute, for an event that we are going to be holding in Washington, D.C. Next month, and which is called Finance and Society. Why don't you describe it and what the goals were underlying it, because you were one of the key organizers.
Yes, it was actually, this event was kind of inspired by the events in Iceland. We saw a profound effect that finance had on our society, and we wanted to sort of draw together the biggest thinkers, the policymakers that have the most impact in our financial system, to bring them to one place and think of
And
this.
we are at a unique juncture in this period in the sense that we have 3 women, Elizabeth Warren, Christine Lagarde, and Janet Yellen. And it's an unusual confluence where you have 3 prominent women in 3 of the most prominent positions as far as the global financial system goes and global regulation. That's an unusual fact, and we thought it was important to highlight that factor, not simply because they are women, but obviously they bring a unique perspective which we hope to highlight and disseminate. Absolutely,
absolutely. Incidentally, there are women leading these very important institutions, and there is full reason to celebrate that in itself. After the crisis in Iceland, women took over the financial system more or less, and people are half joking about that the women go in after all the mess and clean up. We'll see whether women. We think that women need to stay in finance and need to contribute in a profound manner, just like these ladies that are coming to our event and sharing their wisdom with us.
Do you want to give some sort of flavor of the types of topics that we'll be dealing with at the conference?
Yes, absolutely. We will be addressing things like accountability, other people's money, accountability, the impact of good governance in handling other people's money. We will go over credit markets, how they work, whether they are stable, whether they are efficient and doing the job.
And whether they're serving broader public purpose.
Exactly. And that is the whole thing. Finance is supposed to, has been serving
it's been serving a certain class of individuals. It maybe has not been serving a broader public purpose in the way that we hope that
in the last few years,
yes.
It has not. It has actually been very harmful and has a very negative both social effects and psychological effects in many ways.
And we hope to bring a number of panels out populated by women. Academics, policymakers, etc., hoping to offer a fresh perspective and maybe showing that there is another way, an alternative that does show how finance and society, the objectives and the goals can be harmonized to a greater degree.
Very well put, Marshall. This is all what we want to achieve with the conference in DC.
And with your active participation, I'm sure it will be a great success.
Thank you.
Gudrun Johnsen, thank you very much for joining us today.
Thank you so much for having me.